In our review yesterday, we suggested that the information on the unexpected decline in the unemployment rate in the US, which raises some doubts about the reliability of the non-farm payrolls, will pass without inconvenient questions for the authorities. That's exactly what happened. The American media stopped talking about the conditions of the labor market, especially about the inconsistency in the context of the latest non-farm payrolls, and focused entirely on the upcoming debate between Donald Trump and Kamala Harris. Interestingly, the essence of the vast majority of reports in the mass media boils down to the inevitable victory of the Democratic candidate, and this scenario is a positive outcome for the markets. So the US dollar is going ahead with its advance across the board. Today, the greenback is likely to continue its bullish trend. Meanwhile, the US dollar index, demonstrating the position of the greenback against the basket of 6 major currencies, is extending its rise, which began on a Friday. And today, the US dollar index is approaching to the level of 101.70, a 3-week high. The bullish trend is likely to continue in anticipation of the inflation data tomorrow. The inflation report will clear up the Fed Reserve's agenda for the monetary policy, in particular the size of the first rate cut. Investors pin hopes on the inflation data, since the report on the labor market with its contradictions only led to the uncertainty. Let me remind you that in the US economy, employment slowed down in August, while the unemployment rate, on the contrary, decreased. Besides, wage growth remained flat. Statements by Fed Reserve policymakers also attract traders' attention. Thus, a member of the board of governors, Christopher Waller, announced that the time to lower the rate has come, and the Fed Reserve of New York President John Williams is on the same page. The ECB is also widely expected to announce another rate cut at the nearest policy meeting scheduled for the next week. Markets predict that the ECB will cut its key interest rate by 25 basis points to 4% per annum. With such forecast, the European currency loses its investment luster, allowing the US dollar to recover some of its losses incurred during the last trading week. As a result, the euro-dollar pair has returned to the previous range between 1.1000 and 1.1050, which indicates the same market sentiment to sell the euro. To go ahead with its decline, the euro-dollar pair has to settle below 1.1000. Until then, traders will still consider the possibility of the trend reversal upward during the price rebound from a 1.1000. By the way, this already happened last week. Oil is now trading flat. The psychological level of $70 per barrel provides support for sellers who cut the volume of short positions in this area. A technical signal about an oversold asset supports the scenario of a possible rebound of the chart. But now there is a speculative activity in the market, and many technical signals can be ignored. If the price stabilizes below $70, this could enable Brent crude to fall further. Oil is becoming cheaper largely due to the political and economic factors. Concerns remain among investors about energy demand in China, the world's largest oil buyers. Things are not very favorable with the demand in Europe and the US, since the summer holiday season is coming to an end. The price could have fallen faster, even not for news regarding a storm in the Gulf of Mexico, which could lead to supply disruptions. By the way, the issue of interruptions is currently relevant in terms of supplies from Libya. For now, we do not expect any sharp changes in sentiment in the oil market. Tomorrow, apart from the inflation data in the United States, data on the US crude oil reserves from the US Department of Energy will be published, and this information can already revive the market. The ruble is trading steadily with an unusual low level of volatility. One gets the feeling that the dollar-ruble pair is trying to stabilize in the range from 90 to 91, and this is an extremely narrow range for the ruble, so its expansion is inevitable. The borders of the trading range will likely shift up to 90 and 92, and today an attempt may be made to move to the upper border of this range, to 92. So how we're going to be in the short term in financial markets, we will definitely tell you in our next news releases. Subscribe to our channel and follow news with us. See you!